Welcome to a harsh reality that no boss ever tells you when they offer a raise, and no politician wants you to understand. Imagine you just finished a year of tireless effort. Your boss calls you into the office, smiles, and says, "Congratulations, you got a raise." Congratulations, you got a $50,000 raise. You walk out of the room feeling like a total winner today. You think about a new car, luxury vacation, and that long-awaited savings account finally being filled to the top. But wait. Next April, when you file your taxes, the nightmare begins. Your annual tax refund suddenly disappears completely. Childcare subsidies worth $25,000 are cut off. Your effective tax rate jumps by an additional 10%. After a simple subtraction, you realize, with a $50,000 raise, your take-home pay is actually less than before.
This isn't a calculation error. It's a sophisticated trap. Sometimes the more money Americans earn, the poorer they become. Due to the toxic combination of marginal tax brackets, benefit cliffs, and hidden Medicare taxes lurking in the shadows. We are talking about tens of thousands of dollars vanishing before you even see them on your paycheck. In today's detailed video, we will dissect exactly how this system operates to punish your career advancement and success. But more importantly, I will show you 3 legal strategies to turn the tables, helping you keep at least $15,000 extra. By the 6th minute, you will see the script they have written and how to escape it. Don't look away, because what you are about to hear could completely change the financial trajectory of your entire family, forever starting now. Part 1. The tax bracket jump. The silent killer. Let's start with real numbers. Suppose you are a single person,
earning $95,000 a year. You are in the 22% federal tax bracket. Then your boss offers a raise to $145,000. Your brain immediately calculates, "Oh, I have an extra $50,000 to spend." But the tax system doesn't work that way. All that $50,000 is not taxed at 22% at all. A large portion, specifically the part exceeding $106,000,
will be pushed into the 24% bracket.
Look at the cash flow evaporation. First, federal taxes take away $11,640 immediately from you. Second, state taxes. Depending on where you live, prepare to lose another $2,500 from your pocket. Third, FICA taxes for Social Security and Medicare take another $3,825 away from you. Total loss, $17,965 before the money hits your bank. The paper raise is only $32,000, but this is just the tip of the iceberg. The real tragedy lies in the next part of our story today. Part 2. Benefit cliffs, where advancement is punished. The concept of the benefit cliff is the cruelest part of economics. It is not a gentle slope for you to adapt, but a vertical cliff. Take Sarah, a single mother of 2, earning $54,000. At this income,
Sarah qualifies for state child care subsidies worth about $25,481. This is the lifeline allowing her to work while her children are well cared for. Then Sarah gets a big raise to $104,000. She thinks her life has changed, but this new income exceeds the strict regulatory limits. Instead of phasing out, the system cuts 100% of this support immediately. Let's do the math managers avoid.
Total income increase, $50,000. Additional taxes, $17,965. Lost childcare subsidies, $25,481. Final result, you are $6,554 poorer than before you received that big promotion and raise. You didn't hear that wrong. Working harder, taking more responsibility, yet having less money for your children's milk at month end. And it doesn't stop there.
Look at SNAP food stamps and Medicaid. In 2026, SNAP for 3 is $9,000. If monthly income exceeds $2,888 by just $1, all that money vanishes instantly forever. Similarly with Medicaid. This program saves a family $8,400 in health insurance premiums annually. Cross the line. Boom. Gone.
Combined, a small raise can cost you $17,616 in annual benefits. This is the trap's reality. Many families refuse raises or overtime because they know earning more money actually means becoming poorer and struggling much more daily. Part 3. Hidden Medicare taxes and the 2,400% madness. As you approach the upper middle class, another killer appears: additional Medicare tax. Buried deep in the ACA, this tax triggers when you earn over $200,000. You pay an extra 0.9% for every dollar over that threshold. Married filing separately? The threshold is lower. Most people only discover it when the accountant shows the tax calculation at year-end. But listen to this shocking statistic now. Average Americans getting a raise in 2026 see gross income rise 3.5%, but purchasing power drops 20%. In Florida,
the child care limit is $54,000. Earn $55,000 and you lose $25,481 in subsidies. This means the effective marginal tax rate on that extra $1,000 is 2,400%. Not a typo. To earn one extra dollar, you pay $24. This system is designed to discourage social advancement for the workers. If you don't move forward, you will never compete for resources at the top of the pyramid.
It is a cycle.
I was almost there.
Part 4. Strategies to turn the tables. Turning complexity into a weapon. Don't be discouraged. Every trap has an exit. The core principle: the government doesn't tax your gross income, they tax your taxable income. That difference is where you win. If you earn $145,000 but lower taxable income to $110,000, you keep your benefits safely. Back to Sarah. Instead of losing subsidies,
she made a smart move. She maximized her 401k contribution to $24,000. She also maxed out her health savings account with $4,400. Her taxable income dropped to $116,000. She kept her childcare subsidies and saved nearly $7,000 in federal taxes. Sarah kept $32,000 in her pocket.
Level 1. Basic tactics. Saving $5,000 to $8,000. Every dollar in a traditional 401k reduces taxable income 1 to 1. Action. Log into your payroll system. Set the maximum contribution. In 2026, that is $24,500 for most. Calculation. At $145,000, maxing your 401k saves nearly $6,000 in federal taxes. Over 30 years, that's huge. Level 2. Intermediate tactics. Saving $12,000 to $33,000. Combine 401k with a health savings account for triple tax advantages. Action. If you have a high deductible plan, open an HSA and contribute the maximum $8,750 for families. Result: total deduction of $33,000. This pulls a family from losing benefits back to qualifying for benefits status. Level 3. Advanced tactics. Mega Backdoor Roth.
This is how the wealthy build massive fortunes that are never taxed again. Action. Check if your 401k allows after-tax contributions. The total limit is $72,000 in the year 2026. Process. Contribute after-tax money above the limit, then immediately convert it to a Roth IRA. The growth becomes completely tax-free forever. Benefit. In 30 years,
This strategy creates a difference of over $1 million compared to traditional savings methods used today. Part 5. Negotiation strategies for raises. If you face a big raise and the benefit cliff, use the delay timing tactic. Instead of starting in December, negotiate to start in January. Pushing income to next year preserves this year's full benefit package. The wealthy control the timing of income to optimize their tax returns.
you have 12 months to adjust your deductions accordingly. Summary and call to action. The complex tax and benefit system isn't accidental. It creates invisible barriers for hardworking people everywhere. But once you understand the rules, you can use them to protect your hard work. Never just look at the gross. Always calculate the net after taxes and lost benefits. Maximize tax-free accounts. They are your shield to protect your family's wealth. Action today. Check your paycheck. Have you maxed your 401k? Does your company have an HSA? Are you near a cliff? If this was helpful, subscribe and turn on notifications. We will continue. Deco.